Good morning. I'm Richard Calhoun, Creekside Realty, real estate broker for 40 years, working with buyers and sellers here in Silicon Valley. Happy to work with any consumers. We're here to talk about the real estate market. We're going to talk initially about Silicon Valley, then we're going to talk about the Greater Bay Area, and then we're going to come back and talk about details in Silicon Valley. So the first slide is days of unsold inventory. To me, that's the key indicator. It's in for Silicon Valley, which are the counties of Santa Clara, San Mateo, and Alameda County. I dropped Contra Costa County because when I looked at Contra Costa County compared to the other three counties, it performed differently and didn't fit really well. The purple line is your DUI, so you can see DUI right now for the Silicon Valley area. It's basically at 45 days, which is right at the high end, which is the thin blue line of where you'd expect it to be. That's the slowest year we've had. So we're basically tied for the slowest year. The black line is where you would expect it to be, and that's based on 9 years of data going back to 2014. The red line would have been the hottest year. So what really happened, we were basically in the hottest year in 2021 and in early 2022. Then around April 1st, we started to pull away a little bit. And then about May 15th, we really pulled away dramatically and shot up. And by July 4th, we were way above the coolest. And then you can see we had some improvement, some detriment, and now we're basically following the line right at the higher end. For those that want the data, here's the data going back to 2014. Now we move on to offers accepted. Offers accepted is the next most important thing. Concept's the same. The red line at the top would be the most offers accepted, which would be a hot real estate market. The black line is a neutral, balanced marketplace where you'd expect it to be. And the thin blue line is the coolest we've ever had. Where we're at right now is the purple line. That to me is the real story. We're selling significantly less homes than we would expect based on the years since 2014. We also had this little unusual dip here. If you look, all these dips are basically the end of the year holidays, and the dips come early in January, and that's because I use a 35-day period. Here we had a dip for Thanksgiving. It's pretty unusual to have that. We've recovered, and we're now basically on track. I do not believe these are bad data points. I believe that's really happened, and my only explanation is every holiday negatively impacts real estate, and if people are taking holidays more seriously because of COVID, we might have had a more major slowdown because of Thanksgiving, which would tend to also suggest we may have a more major slowdown for the end of the year, Christmas and Hanukkah and all those holidays that get grouped together. Only time will tell. We're basically uncharted territory, but the real takeaway, in my opinion, and the real story about real estate that nobody seems to be talking about is simply the lack of volume. We're just not selling the number of homes that we're supposed to be. Here's the same data going back to 2014. Moving on to active listings. This is the second component that goes into DUI. It's less significant because it doesn't change as much, and you're typically closer to the where you'd expect it to be. In fact, you can look at right now, we have the exact expected level of inventory, and the issue that we're having is we're having less offers accepted than normal. Concept's the same. In this case, low inventory is a hot real estate market, so this would be the hottest marketplace. High inventory would suggest a cool marketplace, and you can see we were setting the records high in 18 and early in 19, but then come 20 and 21, we were in early 2022, we actually had a limited or a very hot marketplace. Right now, we're back to the median. And again, consistent, here's the data going back to 2014. So now we'll leave Silicon Valley for a few moments, and we'll talk about the Greater Bay Area. What's the Greater Bay Area? It's 13 counties. So the first one, which is what I'm calling Silicon Valley, is Santa Clara County, San Mateo County, and Alameda County. I dropped Contra Costa County, moving it down to the yellow one, which is the North Bay, which also has Sonoma, Napa, and Salona. Then you also have number 2, which is San Francisco and Marin. San Joaquin and Sacramento is the Central Valley micro market. And then you have the Santa Cruz and Monterey micro market. And the concept here is to group similar properties together to have the statistics better reflect what the market is doing. Now I have 5 areas that I'm following that encompass the 13 counties in what I'm calling the Greater Bay Area, since there's only 9 counties in the Bay Area. Basically, the first 3 make up the Bay Area 9, and then you're adding in San Joaquin, Sacramento, Santa Cruz, and Monterey. Also, just for people that are interested, offline, I can provide micro markets for these different subgroups within each of these 3 counties. I can also provide it based on city, zip code, or school district to some degree on the school district. Not all the data entries have school district, but I could give you probably a statistically representative thing, especially in Santa Clara County and San Mateo County. Alameda County County might be a little dicey because they don't require a school district. So now we're going to look at similar things. We're going to start off with inventory. Inventory is not very important. I only have inventory going back for Silicon Valley, which is why you only see the other 4 micro market areas over here on the right hand axis for the last couple of weeks of data. Here's offers that I have going back in time, and you can see the patterns for all 5 is very similar. You can see Santa Cruz and Monterey, as well as San Francisco and Marin, are really much smaller than the other 3 areas, which are Silicon Valley, which is Santa Clara County, Alameda, and San Mateo, plus the North Bay, which is 4, which is Napa, Salona, Sonoma, and Contra, Costa, and also the Central Valley. And the reason Central Valley is up there is Sacramento is huge. I was surprised on how large of a volume that represented. So that's San Joaquin and Sacramento. So you have 3 that are pretty close together, then you have 2 that are close together. Makes it hard to really compare on a slide, but you can see the trends are the same. I would almost argue that the magnitude shifts for the smaller ones isn't as significant on a percentage basis, because look at how steep the drop is here, the slope of the lines, where here they're more like a V. Here they're a steep V, and here they're a shallow V. Now we're looking at days of unsold inventory, and since I don't have the inventory, I can't get days of unsold inventory retroactively. So if anybody knows a source of reliable inventory for any of the 13 counties other than Alameda, San Mateo, and Santa Clara, let me know, and then I can go back and reverse engineer the data. Again, for unsold inventory, you only have the historical data going back. I would propose that they're going to follow a similar trend. You can see in the recent couple weeks, I have the other data points over here, but because we go back to 14 on the data, it's hard to tell. And one of the questions I really would appreciate feedback on is, do you want to see the data back to 14, or is 18 far enough back? So I appreciate feedback on that. Here's looking at days of median days on the market. And this to me is important because it tells a buyer and a seller sort of how fast it is in terms they can understand. This tells you that half the homes are selling. So earlier this year, half the homes were selling in about 7-8 days. Now we're basically up here somewhere around 25 days for half the days to be sold. The low one, the fastest one, is again Silicon Valley, Santa Clara County, San Mateo County, Alameda County. We're only at around, believe it or not, 17 days for the median. So half the homes are selling quicker than 17 days, half are taking longer. The other 4 areas are much higher, and they're basically from 25 days up to about 32 days to sell half the inventory. I put this in, very similar concept, but instead of being the midpoint with half above and half below, this is the 75th percentile. So only 25% of the properties take longer than that. And what I would actually argue is that this gives you a representation of what DUI would be. DUI is still a much better benchmark, but this is one that I can reverse engineer. So this will let you see what the other counties' DUI probably looked like, because the DUI is not going to be going down in the days on market going up. I used the 75 percentile to get a little bit more fluctuation on it. Here's the sale price to list price ratio, the magnitude of overbidding, how much pressure the buyers are feeling to overbid. So you can see that your Silicon Valley and your San Francisco Marin, with the North Bay being sort of on the top end of the other 3. But you can see the pattern, the trend is basically very similar, even if the magnitudes for 3 of the F5 areas is reduced. You can see that we peaked out at about 118.5%, and we're now down to about 102.5%. And we'll see in a little bit that the Alameda County is actually doing surprisingly well out of everybody. This is now looking at the frequency. This is how common it is, what percentage of the sellers are getting more than their asking price. You can see we're all below 50%. So less than half the sellers are getting more than their asking price. And we're basically approaching 40% for Silicon Valley and San Francisco Marin. The other 3 are much lower at somewhere around 30% plus or minus. So that's 30% of the sellers getting more than their asking price and 70% getting less than their asking price. Here's sold price going back. I added in the horizontal lines. We come back here to April of 2021, which is right here. You can see that all the micro market areas now are to the left of that. So we're below the pricing that we saw basically any time in 2021 or 2022. An interesting slide. You can see the cheapest area is the Central Valley area, followed by the North Bay, followed by Santa Cruz and Monterey. Monterey. One of the things you have to be aware of when you're using such a big things in Monterey, things like Pacific Grove are going to be expensive, but the 101 corridor is going to be fairly inexpensive. And then you come up to the Silicon Valley, and then on the top dog is San Francisco and Marin as far as price is concerned. Here is looking at the same data on log scale. The reason I do that is look at the vertical spacing. It should stay roughly the same. And the two takeaways that I have is look how Silicon Valley caught up to San Francisco. Silicon Valley really hasn't pulled away from the North Bay or Santa Cruz. So what this is really saying is that San Francisco and Marin have underperformed in appreciation in the recent years compared to the other areas. What's also interesting is the blue line has come up, and it's come up relative to all of them, just looking at it visually. And therefore, the Central Valley has appreciated a greater percentage than Silicon Valley, Monterey, Santa Cruz, San Francisco, and Marin. Now we're looking at the appreciation. And what I did is I looked at price, and I noticed this plateau back here where prices were pretty flat for a whole year. Now, it's not a calendar year. I started basically on April the 1st, 2015, went until March 31st of 2016. I have a full fiscal year of data. That median for that whole period of time was my base year. Prices were less before that, and then this is the appreciation. So again, you can see now San Francisco has appreciated the least out of the four areas, followed by Santa Cruz and Monterey. They're very close together, or the North Bay and Silicon Valley, and doing the best out of the group is the Central Valley. And you can see the Central Valley has been sort of the highest appreciation rate for most of the time. Silicon Valley has come up and outdone everybody by a long shot at times, but it also underperformed at times compared to the Central Valley. So that just gives you sort of global overall appreciation. Here is for those that actually like raw numbers, the number of offers accepted, I think, is the key. It's very low. There's nothing on here that would tell you they're low, but these are the actual numbers. DUI, you can tell. Now you can see that the Central Valley is slower, as well as Monterey and Santa Cruz. There is differences in micro market areas. So my 40 to 80 applies to Silicon Valley. It applies to San Francisco and Marin. It looks like it may even apply to the Sonoma area, although, in Sonoma, it might be a little bit higher. It might be 50 to 100 days would be a balanced marketplace. But clearly in the Central Valley and Monterey, it would be it would indicate it's higher than the 50 to 100 range. I do know when you're looking at micro market areas, I have some as high as 75 to 150, and that would be South County and Santa Clara County, as well as Saratoga and Los Gatos. There is variation between counties, which is one of the drawbacks, but you can't have any metrics that I'm aware of that applies uniformly across the local area. This is your sale price to list price ratio average. Look how San Francisco stands out at 103.6, followed by Alameda County at 103. Everybody else is basically under 100, and it's those two that pull up the Bay Area to 100.1% overall. Then the frequency of overbidding, again, the two are right on top at 53% and 47%. Everybody else is basically 33% down to 25%, with an exception of San Joaquin that's only at 18%. You can see overall the Bay Area is at 35%. And then here's the sale price median for the different areas. So you can see Santa Clara and San Francisco and even Marin have very similar median price. San Mateo is the high benchmark at 100.7 million. The thing that I will point out are these two columns. This is the share of the 9 Bay Area counties. Santa Clara County is 17% of the Bay Area. San Mateo County is 8%. So it's basically half of Santa Clara. Alameda County is 19%. So it's a little bit higher than Silicon Valley and higher than Santa Clara County. San Francisco and Marin are pretty small at 5% and 6%. Your North Bays are basically 15%, with Contra Costa coming in at 21 and Napa coming in at 3%. So you can see the volume of transactions in Napa is very small compared to the number of transactions in Contra Costa County. Same concept for all 13 counties, and you can see Sacramento is 20% of the entire marketplace. So that's pretty significant. And then San Joaquin is 10%. So between those two counties, that's 30% of the Bay Area right off the bat right there. These are the percentages that it would represent if it was part of the Bay Area, 9 counties, and it's not. But you can see Sacramento is not 30%. It's 50% bigger than the largest component that actually is one of the components of the 9 county area, which is Contra Costa County. Here we have our URLs. The green is what I call the root URL. If you add in 2022, we'll go to 2023 next year. You get to the live presentation Saturday mornings at 9 a.m. The 2022 will continue to work, but I'm just going to keep it consistent with the year date code. If you put in the H, the year 2022, the month 12, and the day, which is the 17th, you'll get the handout. The handout is not posted, and I should have updated that 0 to a 7, so sorry about that. And then if you want, the green URL by itself takes you to the archive on YouTube. If you want a specific episode, you put in the year, month, date code. With that, I'll see if there's any questions. Not seeing any questions, I'll move forward. Now we'll look at Silicon Valley data. We're looking at single-family homes. We're looking at 3 counties, Santa Clara County, Alameda County, and San Mateo County. We're looking at 5. We're looking at reference years 2014 through 2022. I was hoping to be able to go through 2023, but right now I don't know of any way to increment it 1 week at a time. So right for the time being, I'm backing down and going only to 2022. Here are the 3 individual counties that make up the Silicon Valley marketplace, and this is inventory. So you can see the patterns are the same. You can see San Mateo County maybe doesn't fluctuate as much. It comes up and levels off, where Santa Clara County and Alameda County are more of a huge cycle. You can see the impact of COVID. You can see the slowdown for the current year. You can see historically each year it's been slowing down. Here's the number of offers accepted. Again, the impact of COVID is very noticeable. Here is the offers coming down for the end of the year. Pretty steep, but it's normal steep at this time of the year. You can see the little correction, the dip, and then coming back up that we saw in Santa Clara County. And that was sort of unique, it appears here, by Santa Clara County. You saw it in the overall data when we first started, but now you can see that it's here in the blue line, but it's really not there in the gray line. You know, it might have been flat, and I really don't pick it up in the orange line. And that's the reason for doing individual counties as well as the total. Here's your DUI. DUI is days of unsold inventory, very closely grouped together. You can see how rapidly the market slowed down. Then we improved and we turned around and slowed down. Now we're improving, but we're improving more because the inventory drops every week as we get closer to the end of the year, and sales are going back over the last 5 weeks. So we're using sales volume from when there was more inventory. Here's median days on market, and you can see how boxy that is. And that's because when you're doing median, it's supposed to be an actual data point. 1 week it could be 9 days, and next week it could be 10 days, and there'll be very little fluctuations. So that's why you have this bounce up and down. You know, it really isn't showing any change, but you don't get like a whole number of days, like 9.9 days. You get either 9 or you get 10. You do get 9.5 when you have an even number of data points and you're right there on the cusp. The 75th percentile is leveled off by quite a bit. And again, this is keeping consistent with the slides earlier. This is more reflective of the DUI. You can see how it really slowed down. Now you can see the improvement. So now it will probably slow down again. Days on market also tends to lag behind DUI. DUI is what I call a leading indicator. Now we're going to change over, and now we're looking at just the 3 counties instead of the 4. So we've dropped Contra Costa County. So this is my new Silicon Valley micro market area. Notice that the best week now is rolled back to March 29th, which is one of the reasons I pulled out Contra Costa County. Contra Costa County slowed the best week from being March 29th to April 12th. So it moved it back 2 full weeks. If 3 counties are moving together, you'd rather know what they're moving together at. I think this is a better match of moving Contra Costa County into the North Bay. So you have the hottest week ever, March 29th, 2022, the coldest, slowest week ever, which was November 30th of 2001. The current week is the purple week, and a year ago we were on this dotted line. Another thing I've changed is the current line getting populated is bolder to help you see it there, because a lot of people were saying you're not really adding the data. And so by making it bold for the week that it pops up, you can actually see the data that is actually being added. Now we're one go, and we'll start off and we'll go a month at a time, and then as we get to week 13 we'll change over to a week at a time. There's a little bit better, so both of them. Now it improved, so I dropped the cool marketplace. It improved a whole lot. Very small change, so I said we were at a plateau. Now it's already dropped down, so that's why the down arrow, down again, down again. So you can actually see the data pretty quickly, down again, down again, and now we're going to start seeing very little change. See the dotted line here? It's right on top. See, it's right on top. Right on top. It's, going down ever so slightly, down ever so slightly, up a little bit, up a little bit, right on top, right on top, right on top, no change, a little down, a little down, in current data. And that's actually plus 1 week. So you can see sort of the purple, but you also see this green coming out. And by plus 1 week, it's not plus a full week. My fiscal real estate year is starting on March 1st of every year, and then it goes 7 days forward. So basically, it starts on a Tuesday of this week. So then what I want to do is add in Tuesdays. It ends on Monday, starts on Tuesday. So I want to add in data for Tuesday, Wednesday, Thursday, Friday. So I'm adding in 4 days of data, and that's why I'm calling it plus 1 week, because it's not the same weekly data that everything else is. But on this graph, I don't think you're really going to do. So this is the sale price to list price distribution for each week for single family homes in the 3 counties that make up Silicon Valley micromarket area. Here's the appreciation over that fiscal year that I talked about, basically April of 2015 through March of 2016. You can see that these 3 counties have come together fairly close. You can see that San Mateo County has underperformed slightly over almost a 7-8 year period of time. Here's the median sold price. The least is Alameda County. Then you can see Santa Clara County, and then you can see San Mateo County. You can see that Santa Clara County caught up to San Mateo County to some degree here, but it looks like the separation is coming back again now. Here's the median sold price for the different areas, and that's on the log scale, so you can see the vertical spacing. You can see how close together it got. Now it's separating a little bit. This to me again is the real story. In the last week we only sold 435 properties, and this, to be consistent with my data, is the 4 county area. At least that is my understanding, and I will change this to 3 county data to be consistent. But we only sold 435 properties last week. That's going to go up because of late reports, but I don't think we'll catch 476. These are second and worst. These 2 are still basically at the worst. Here, the red is the hottest. So you went from basically the second coolest, where the shaded blue is, to the hottest. And now we went to the current year. But all these current years, you're basically at the bottom again. Earlier this year, and it's off the table now, we were having the best second best year, second best basically to 2021. 2021 was the best because of the pent-up demand from the shelter in place in 2020. But then with 2022, the pent-up demand was gone, so we were basically second best. But then we rapidly went from second best to second worst, and that's where we've been ever since. Occasionally, looks like maybe 3 weeks, we're hitting the worst volume, so the least number of homes selling. Now we're looking at just single family homes. So I dropped off my condos and townhouses. I dropped off Contra Costa County. So now, and I also dropped off 1 week data. Now what you're looking at is the number of new listings for the 3 counties. Silicon Valley was 144 this week, down from 217 for a drop of 33%. You can see the numbers overall. Alameda County dropped the least. San Mateo County dropped the most. Active listings, basically overall, you're down 43%. San Mateo again dropped the most, the active listings overall, followed by Alameda, followed by Santa Clara had the least drop, but it still had a 34% drop. So you can see inventory is dropping fairly significantly at this time of the year. Number of offers accepted, you can see they're pretty much down. San Mateo County was sort of flat, which is sort of surprising with so few new listings coming on the market, but it's delayed by a week. So the number of new offers this past week is the number of new listings the week before. DUI down 20, down 14, down 31, down 19. And most times of the year, I would say huge improvement in the marketplace. But this is just the time of the year you're having a huge drop in DUI because inventory is dropping. I've just said this before. Sales go back for 5 weeks, so we're still pulling sales from when there was more inventory, more more activity. So your DUI drops down very rapidly. And then the number of closings. Here we have the appreciation over 2020 for the entire calendar year. I went back and I believe I recalculated this deleting out Contra Costa County, which is why I changed this. I will verify that for next week, but I'm pretty sure I did. Guess I could look and see the numbers are different, but I may not have dropped the volume because I don't remember looking at the count. So this volume, this 36,000 is clearly wrong, because if you add up 5,000 and 9,000, that's basically 14 plus 10, 5 is, call it 25, 26, and I'm at 36. So I left the volume in, but I'm pretty sure I adjusted out the median price, but I'm not sure. The individual counties don't change, so they're going to be accurate. And you can see 9% appreciation, which sounds pretty good until we see a slide in a second where we used to be. 5%, not bad. 13%, really actually pretty good for 2 years. That's 6% a year. Now we're going to be looking at Silicon Valley micro markets. These are the micro markets within Silicon Valley. I have Santa Clara and San Mateo because I had them. I will be adding Alameda County in the near future, hopefully next week. And what I'll do on Alameda County is I'll go up basically to 580. I'll keep the map the same, but show the coloring codes up in Alameda County since I now have the data. So this is days of unsold inventory. You can see that Santa Clara County is a lot of pink, which I think would surprise a lot of people. So the market is moving quickly. There just isn't much volume to the market. San Mateo County is doing okay. The only area that's doing slowly is the Half Moon Bay area, but very few homes sell over in the Half Moon Bay coast area at this time of the year. In fact, from memory, I think it's only 3 units have sold in 35 days. Very, very low volume. So a little bit of fluctuations. This is basically statistically not significant. And if you cross that out, you can see the range isn't bad. We're basically from the low 30s to a high of about 58 with another exception at 75 days. So you have one exception at 75 days for the expensive areas in San Mateo County, another exception for the coast at 140 days. Everything else is pretty closely together. Here's the magnitude overbidding. Blue again is a cooler overbidding, something below 99%. You can see there was only one area with red, and believe it or not, Cupertino Sunnyvale is still getting 105%, but the entire Alameda County is getting 103%. So they're doing pretty well for whatever reason. I don't get into the reason. I report on what the market's actually doing. Here's the frequency of overbidding, how common is overbidding. So you can see overbidding is very much less common now. A lot of blue showing up. If you look very carefully, you can see a little bit of pink here. Where you can really see it is if you come over here, you can see Cupertino Sunnyvale is pink, and that's because it's above 50 days. I start shading it pink at 50 days. This has nothing to do with the speed or the heat of the marketplace. This is simply the price. Redwood City is the median price. It is noteworthy that San Mateo-based cities is now actually priced lower than Redwood City. Foster City is exactly equal. You can see that over here on the numbers. Redwood City is at 2.18. Foster Cities is at 2.18. So they're an exact match. You go up to the Bay Cities and it's at 1.96. So there's about a $200,000 difference. That's 10%. The Bay Cities, San Mateo, Burlingame are normally more expensive than Redwood City. With the low volume of sales, it could just be the market mix of the properties versus actual property values. But in general, the bluer the color, the cheaper it is relative to the median. The redder the color, the more expensive it is. Here is your DUI for your areas. I was expecting to have, I don't know why it only got cut up to 9. Sorry about that. These are the micro market areas. These are the micro market areas in Alameda County that I'm planning on adding in the very near future, hopefully next week. Here's your DUI. Now you can, and this would be current data, so 12/17/2022 based on 5 weeks. This is your magnitude of overbidding, the frequency, and apparently I dropped off price. So in my scripting with all the changes I made a few mistakes that I'll try to correct for next week. So you can come over here and pick the micro market area. Normally you can come over here and look at the price range and pick the price. Here's a quick recap of your different areas. So Alameda County is only 82% of the inventory you'd expect it to have. Again, it's at 40, almost everybody's, right there in the mid 40s on days of unsold inventory. So a balanced marketplace close to a seller's marketplace. But again, it's the lack of volume. Here, when you're getting 3% above your asking price, that's pretty good. So Alameda County is red hot based on the amount of overbidding and based on the inventory, but it's a balanced marketplace based on the days of unsold inventory. It could very well be that Alameda County is normally a little bit slower, potentially that 50 to 100 range. So this would still be a seller's marketplace, and that would actually tend to make sense. The frequency of overbidding, basically the high again at 47%, 33% for the other two counties. Now, this is noteworthy. This is your appreciation. San Mateo County is less value now. The median price is lower now than it was in the entire calendar year of 2020. So for San Mateo County, we're back to pricing where we were. 1% isn't much, but I would actually say late 2019, early 2020 is basically where the pricing is. You can see we were up to 37%. Alameda County was up to 51%, is now down to 13. So 13% appreciation for 2 years isn't bad, but 13% when you were at 51 just 7 months ago is not very good, and that's why I have them all shaded blue. Now this slide is Santa Clara County single family homes only. It's going back 20 years, and it's not comparing apples and apples, because to get December data, I can't get that until January the 5th of next year. So the inventory is going to drop down rapidly. So that's really a non-issue. DUI is going to drop down rapidly. So that's a non-issue. Number of volume of sales is going to drop down dramatically, but this is already towards the low side. So when we get to January, I expect this to be a record low number. Overbidding is basically right at the low side. All these are 100%, but you get back here to 2011 and you start getting the same magnitude. The frequency at 34%, again, you have to come back to 2011 to get the same order. And median price is down from last year. 10 percentile price is down, and the 90 percentile price is down. And for those that like to compare apples and apples, this is November data that became available on December the 6th. So you are comparing apples and apples. With inventory at 729, you can see that we had reasonable inventory, sort of the level of inventory you'd expect. You come down to days of unsold inventory, 51. Very similar to 2018, but other than that, you got to come back to 2011 to get to that kind of order. I will point out that back in 2007, which is the lowest number of transactions we had a DUI of 235. So then you had a slow marketplace as well as a low volume marketplace. Right now we have a fast-paced marketplace, but with low volume. Here's your median price. You can see we're down in the number of closings at 564. I believe that's a record low. Year 2007 was 598. We've had fewer closings. And again, with that, we're back to the recap of the URLs. I think I'm done. I appreciate any feedback on the new set of graphs. I'll try to clean up some things. Really appreciate feedback on whether you want data to 14 or 18, or if I nailed it with the first couple going back to 14 and then added it on the 18. Just looking for feedback on what people would like to see, and not seeing any questions though. I will call it a week. Have a great week, everybody. And the handout is not posted yet, but I'll get it up shortly. Probably get posted right about the time I get the edited video up. Thanks. Have a great week. Bye now.